Good morning, everyone. Paul Duncan here with GammaEdge. It is Monday, the 28th of March. Let's go ahead and get into this. We're going to take a look at the SPX and then the index ETFs. And one of the key things that we're looking at here is that we've had a significant increase on the call side of the SPX. So there is a lot of upside movement here. Also note, though, that we did see some increase on the put side. So the overall gamma condition is decisively positive. Large change on the positive gamma side, cumulative positive gamma. Some change here on the net negative gamma. We consider this bullish, but look at protection being added to the SPX, and this is fairly normal. We think as we advance forward, people move their stops up, people roll the protection, etc. When we take a look at the SPY, we've actually gone from a fairly significant amount that says 200,000. Don't necessarily worry about the units in this case, and now we're at 120,000. And what this basically is showing us is that we've had a significant drop on the call side for the net positive gamma for short-term expiries. And when we see that, it could be a result of monetization, could also be a result of the expiration that we just had on Friday. Just be aware of this. This is somewhat of a divergence between the SPX and the SPY. The Qs and IWM, you can see, are still net negative gamma overall. We've had an increase in the Qs on the put side, so the short-term negative gamma is increasing, short-term positive gamma is decreasing, and we can see that on IWM too. Not much of a change here on the net negative gamma, but net positive gamma has decreased a significant amount, and it's worthy of note. Because of this, you see we've colored things green, still bullish, but in general we're going to throw a yellow in here just for cautionary. We could see some volatility into the week and end of the month that's occurring. When we take a look at the 0 DTE, it's worthy of note to see that we've got net positive gamma that is expiring today. The Qs go against that grain. We have a larger net negative expiry. If we see any monetization of these, that could be fuel to the upside. Not expecting a lot of push upward, though. You can see that we're right up against 360 here. We're well above where we would consider the net positive gamma strike here, so we got a lot of in the money on the SPX. We don't have a lot of in the money on the SPY, but we do have some also in the money on IWM. These are going to be settled by the end of the day. Most people do not allow these to go into the expiry without doing something with the moneyness. Remember, the SPX is cash settled, and there's not as much pressure to monetize as we go forward. For that reason, again, green overall, but we could see some downward pressure as monetization occurs, giving us the yellow light. When we take a look at the market model, we're actually going to have two slides here on the market model. Breadth is still very, very poor. We are above the historical, what we call the ribbon, and as long as we remain that with the cumulative tick, we're in a good situation. We need to see a continuation upward today. If we see that continuation and remain above these three white lines, which are very, very short-term moving averages, we'll have confidence to continue to increase our exposure. But if we drop down here through those, we're going to have some serious things to worry about as we approach the top of the ribbon. It could indicate weakness. I will note whereas before that was the tick for all US composite, this is the ARCX tick, and you can see it's telling a little bit of a different story. It's not advancing. We consider this the quality tick, and so when we do the cumulative tick here, you can see that we're having a hard time breaking higher highs here, and when we see that lack of being able to push upward, it does give us pause. This is comprised of stocks on the NYSE, the NASDAQ, and the AMEX. And so a little more quality than the previous slide. The key takeaway here is that we really need to see a continuation. If we fail to see the continuation going forward, it could be an indicator to take some profits off the table. When we take a look at the ESM for the June expiry, we're basically looking at just a little bit of weakness. Positive trends did move up just a slight amount. I'm not going to read too much into that, except that perhaps we had some calls being opened up. that made this move up, as well as calls being closed below it, monetized, whatever the case may be. Hard to tell with this, but nevertheless, take a look. The gamma 0 and the delta 0s are as indicated. We're above that, so clear gamma condition on the positive side. Single expiry. We like this presentation. It's very clean. It'll be interesting to see how we push higher, if we push higher, excuse me. For that reason, color it green with a little bit of yellow, just because of the overall positive transition moving up slightly as opposed to moving down. When we take a look at vol and the VIX, vol is relatively flat. You can see that, and this is good in general. We're not seeing an expansion of volatility, which typically favors the bulls, excuse me. And then watch for the VIX to actually move higher than the previous high of the day. If we see that, we might end up putting some spreads on for a little longer term dated, but for right now, there is no real play that we see within vol. Now, taking a look over here at the expiration, this takes a look at the overall net expiry on for each expiration here on a net positive or net negative gamma. And you can see, as we discussed last night during our open mic session, that this is becoming really neutralized even as we get closer to it. There's just a lot of balancing call structure that's going in, which is neutralizing what's happening on the 31st. I note overall we've got a lot of positive gamma building within the overall system, which is indicative of being in that positive gamma environment. When we take a look at the net GEX by strike, you're sitting right in this particular area here. Here's the JPM legs that expire at the end of the month. Here's 4,300 as a reference, 4,550 right here. So we're just below a fairly key level. And then 4,600, as you can see, is the dominant level to the upside. Taking a look at the 0 DTE, this shows you that we are in that positive gamma environment. Fairly weak amount of expiry today, not as much as you would think, and you can see that your eye balances pretty much across the board here, which is indicated with this. I think in general, if we can push above the 45.65 level, we could see a push higher. You can see call open interest for the expiry today is sitting up here at 4,600. It'll be unlikely really to push much higher than 4,600 into the close. On the downside, I do see the 45.25, 45.20 level being pretty much kind of the downside. You can see gamma really starts flipping negative at that point. So I see it unlikely that we're going to get down here, but if we do drop below, I think 44.80 in this area will be a holding area. I don't see us going much lower than that into the close. The SPX overall net positive, as I said, not overly strong, but strong enough here. 4,600, as we showed by the net expiries before, is a real key level here. Here we are here at the yellow, which was our close on Friday. I do see this area of liquidity being down here at square 4. I don't see us going much below this. We may test some of this intraday, but I can't see us actually closing down here in the bottom area. So that's it for today. Green light with some cautionary things. In general, if your stocks are working, go ahead and add to them. Make sure you have your defined risk. If you like what you saw today, please join us over at GammaEdge.us. We've got a great group of traders there, all learning how to apply Gamma to their trading methodologies. We have many different ways of doing the same thing. www.GammaEdge.us is the page to this Discord sign up. That'll get you a 14-day free trial. Kick all the tools, or all the tools turn on, kick the tires, and let us know what you think. Follow us on Twitter, of course, GammaEdges with an S, and then you're watching this on Twitter, or excuse me, on YouTube, of course. And, would urge you to like the content if you do like it, and follow us so you get notified of the next one. So make it a great Monday, everyone. Thanks, everyone. Bye.